Welcome back. Let's get in a very, very special interaction. We caught up with Neeraj Kanwar, Managing Director of Apollo Tyre, about the demand and export scenario he claims and expects margins to go higher from here on. Let's listen in to this exclusive interaction.
Now we are seeing an uplift in both truck and car, given the economy boost that's happening in India. The GDP is expected to be around 6%. So we are seeing freight movement happening. Specifically in truck, TBR for us has gone up 18% year on year, whereas passenger car has gone up 15%. So replacement is back. Also in the OEM segment, we are seeing truck commercial segment coming back up. Cars are also coming back up. So pretty positive trend in India currently.
Okay, so that was about India, but earlier you had pointed out about sluggishness in key export markets, especially Europe. Have things bottomed out when it comes to other export geographies, especially Europe?
Well, no, Europe is still going through a massive recession. Inflation has started coming down, so that's a good sign. Last quarter three, the passenger car segment was down 14%, but Apollo in Europe was down only 5%. So we did gain market share. Our high focus is in improving our product mix in Europe. So going for the ultra high performance tires, which today constitutes nearly 45% of our total pie in the car segment. So I'm again very optimistic about Europe, given that we are a very niche player. We are targeting markets where we are less than 2% market share. France, Italy, Spain, UK are the four countries that there is clear focus as far as Apollo in Europe is concerned.
So any timeline that you're working with, when can we see recovery in Europe? Are next couple of quarters going to be soft?
I think the demand is going to be sluggish for the next quarter, next 2 quarters. So first half is going to be tough. But like I said, we are a niche player. We are a small player in Europe. So we get hurt last. Our whole intention is to see how we can get into various new distributions. Russia-Ukraine war has also given us an opportunity because there were close to 10 million passenger car tires coming in from Russia into Central Europe. So that has given now, because that has been banned from coming in since July of 23. So that gives us a new opportunity to go into that new distribution network.
So you're talking about how there are certain key areas where you're looking at making your foray, but given the fact you're making investment into new geographies, would it mean that margins will be under pressure? What's the outlook?
No, I don't think that's going to hit the margins. On the positive side, raw material has come down 6% quarter on quarter. So that both natural rubber and all our other raw materials have softened out. So EBITDA margins are going to be healthier. We reported around 14% EBITDA margin in quarter 3. I see an upside coming in quarter 4 also. And going forward, I believe the raw material trend is going to remain at this level. Given our pricing strategy is going to be sustainable, I think EBITDA margins are going to go up from here.
Well, Neeraj, you did point out that there has been a bit of reduction when it comes to the raw material pricing. So are you passing it on to consumer in terms of price cuts, or how's the pricing intensity at the moment in the industry?
Well, I think we are maintaining a strong discipline as far as pricing is concerned in India. In Europe, we are seeing slight drop in by competition in prices, but we are yet to see. It's very soon that I like to comment on. But as far as India is concerned, there is a proper discipline as far as pricing is concerned.
Need to give us a bit more color in terms of how the capacity utilization is at this point of time. Do you have plans to increase and expand your capacities? Any capex plan lined up for the next 2 to 3 years?
Today we are really focused on seeing how we can improve our ROCE and our cash flows. So we are going totally capex light for the next 2 to 3 years. We have enough capacity to look after new markets, to look after new distributions. Our capacity in Europe was running at around 90% utilization. In India, it's running around 80% utilization. So we have enough capacity. On top of that, what we are trying to do is use digitalization. So using AI and machine learning, getting a lot of data from the equipments to try and see how we can improve our productivity. Specifically, I'll give you an example in Hungary, in our plant in Hungary. We, through AI and machine learning and through other engineering processes and manufacturing processes, we have increased our productivity to 30% more. So this is where the investment is going into digitalization and to see how we can improve our productivity in all our plants. So really, there is no plans for any expansions, only looking at debottlenecking, looking at using these tools to try and see how we can increase production in all our categories of products.
Well, Neeraj, Apollo Tyres, of course, apart from digitalization, has also been the front runner when it comes to adoption of sustainability. I was just reading about a tire which you are making with 75% of recycled material. Give us a bit of sense of where you are in your sustainability, timeline, and what's the target?
So our vision is very clear as far as sustainability is concerned. We are looking at becoming carbon neutral by 2050. That's point number one. Point number two, we are looking at by 2030 that our raw materials are around 40% of our RM is sustainable. So we have come out with tires, like you just said. In passenger car, we've come out with a 75% green tire. In our agri, we've come out with a 100% sustainable tire. So there are a lot of efforts around the company looking at how we can go in the sustainability path. As far as plants are concerned, we are looking at water consumption, we are looking at carbon emissions. So you have to see that through AI and machine learning also, our plants become much more efficient, thereby using less energy and therefore giving out less carbon emissions. As far as products are concerned, we are looking at obviously low rolling resistance, which then contributes to the green energy in the automotive sector. So there's a lot going on. There's a lot of focus on sustainability across the globe for Apollo. And I'm happy to say we are going in the right direction as far as sustainable procurement is concerned.
And lastly, Neeraj, before I let you go, a quick word as to what do you think will be the next big trend to watch out for in the industry and how Apollo Tyres is really gearing up to tap that opportunity?
Well, I think mobility is going through a major shift and Apollo is gearing itself up to look after that new change. And mainly it's going to be driven through EV, electric vehicles. And Europe has already been electric vehicles for a very long time. At least for the past 2 to 3 years. India is now coming into electric vehicles. So as far as Apollo is concerned, we are geared up. We've already come out with products for tackling electric vehicles. We've already launched in Europe and we've launched in India. So we are gearing up ourselves to see mobility and how mobility is going to change as we go along.
Okay, that was the management of Apollo Tyres.
Very rare management that you get to see bullish, talking about what can happen in the tire industry, how they'll gain market share, move up the value chain. So definitely something interesting to watch out for.